When it comes to trading, everyone loves to talk about indicators, RSI, MACD, moving averages, and other many indicators out there. But the truth is, the real magic happens in the price itself. Price action is the purest and most powerful trading signal you would ever need. No clutter, no lag, just clean movements that tell you exactly what's going on in the market right now. So today I'm going to show you 5 powerful price action trading strategies that can help you trade like a pro. You will know how to catch the big moves early and maximize huge profits per trade. So make sure you stick around because by the end, you will know how to spot profitable setups before the crowd and know exactly where to buy and sell even when others may be confused. If you're new here and you want to learn more trading tips, strategies, and get weekly market insights, then don't forget to subscribe and turn on the notification to get notified anytime I upload a new video. And you can also give a thumbs up to like and share and help this video get at least 1000 likes. So without further ado, let's dive in. So first off, what exactly is price action? In simple terms, price action is the story of price movements. You know, when price goes up and goes down, it is the heartbeat of the market because it shows where traders are winning or losing in real time. Every candle, every week, every pattern tells you what buyers and sellers are doing. When price hesitates at a level, it shows buyers and sellers are wrestling for control, and that level is your support or resistance. When it breaks cleanly, it means momentum is strong. But if it breaks and reverses quickly, that's a false breakout, a trap. The beauty of price action is that it gives you real-time information, no lag, no waiting for indicators to confirm what has already happened. Indicators lag. They use past data. This means by the time your MACD or RSI indicator gives you a signal, the move has already started. That's why professional traders and institutions rely on price action. It helps you anticipate the move instead of reacting to it. Price action lets you read who is in control, if it's the buyers or the sellers, and then lets you act in real time when the action is happening. I'm not saying you should never use indicators. No, indicators have their own benefits as well, but you don't need a dozen indicators. You just need to understand how price moves, how it reacts and rejects key levels. So now let's get into the 5 powerful price action strategies. So the first strategy I'll be showing you is the candlestick patterns. Candlestick patterns are the DNA of price action. Each candle that forms on the chart tells a story. It tells you who is winning, who is losing, and what might happen next. The top 3 candlestick patterns every trader must know are the pin bar, which has a long wick and small body, and signals a sharp reversal of price. The engulfing candle pattern, in which a candle's body completely covers the previous candle before it, and it shows a strong shift in momentum that leads to a trend reversal. And the inside bar, which is a smaller candle that forms within the range of the previous candle. It marks a period of consolidation before breakout. When these candles appear at support or resistance zones, your odds of winning skyrocket. Now let me show you some examples. So this is Apple's chart on the daily time frame. You have support marked at this level here, and you can see a well-formed pin bar candle formed at this key support level, showing that price is being rejected and will reverse back upwards. This is your buy signal, and see how much price went up after that pin bar candle formed. The second price action strategy is trading support and resistance zones. Support and resistance are like the floor and ceiling of the market. Support is where buyers step in to defend price and pushes it upwards, and resistance is where sellers take control, pushing price back downwards. Price tends to bounce between these levels until it breaks. The more times it touches that level, the stronger the zone. Just like in this Tesla's chart on the 30 minutes time frame, we can see how price bounced off this level of support a lot of times. 1, 2, 3, 4, 5. And when you combine support or resistance with a clear price action signal like a pin bar or engulfing candle forming at these key levels, and boom, you have a high probability entry. So that's your signal to enter a trade. Here's an example in Palantir's chart on the 30-minute time frame. We have support holding strongly here and see the pin bar forming nicely here, indicating price is being rejected, and see a strong bullish candle after the pin bar pushing the price upwards. And if you look up here at resistance, you will see the pin bar as well, just before this massive drop. So always look out for this price action signals at key levels of support and resistance to confirm your entry before entering a long trade or shorting a trade. The third strategy is another high win rate price action strategy called trendline trading, and it is a very powerful concept to understand. Trend lines are structure. Trend lines are the trader's best friend. If you draw a trend line that connects at least 3 swing points, then you have your buyers. And the more times price touches the trend line, the stronger the trend. When you see price making higher highs and higher lows, that is an uptrend. And when you see lower highs and lower lows, that is a downtrend. And you can also add the 50-period moving average for confluence. If price respects both the trend line and the 50-day moving average, that is where the big players, institutions, and smart traders are watching. The best time to enter trade in a trending market is at pullbacks. If price pulls back and stays above the trend line and 50 moving average, that is a bullish sign and considered a weak pullback. Also, Fibonacci pullbacks above and between 0.382 and 0.5 show strong trends, while deeper pullbacks mean caution. If pullbacks stop above 0.382, it indicates buyers are still strong, and if it falls below 0.382, it signals a deeper correction risk. And that is exactly what happened in this example. SPY's price pulled back below the 0.382 line, which suggests a strong pullback and indicates price will start moving sideways or reverse back upwards. In this case, you want to wait for a price action signal for confirmation. And for weak pullbacks, that is stopping above 0.382 line, enter with a standard stop loss below the low. You can find the Fibonacci retracement tool on the left side at the top corner on Trading View. Click on this one at the top to appear on the chart and trim down the number of levels to only 0, 0.382, 0.5, 0.618, and 1 under settings. Then set the lines on the low and the high like you see on this chart. So when you get a price action signal that has confluence with a trend and a level, you have a good quality trade setup. And the fourth price action strategy, which is one of the most powerful setups, is the build-up, also known as the consolidation phase. This is where the market pauses into a range, moving sideways and building momentum before a big move. Most traders chase after breakouts and then easily fall into traps, but smart traders wait for the build-up near key levels because that's where risk is smallest and reward is highest. Once price breaks out, you would get an insanely good risk to reward ratio. So when you see price tightening up, squeezing and forming slight higher highs under resistance, get ready for an explosion. And the smaller the range, the bigger the breakout potential. So your patience is required and pays in the end. As you can see in this example, this is Apple's chart on the 30 minutes time frame. So after this decline, it goes into consolidation. and it forms a rectangular pattern moving within this range. Price is tightening up and squeezing into the resistance area. This is it building pressure before it explodes. As the range gets smaller, that's a sign that the breakout potential will be massive. So this is where you get a clean entry to place your buy order, and you can set a stop loss just right below your entry for a great risk to reward ratio. And see the big bullish engulfing candle. That is your price action confirmation signal. Now see how big price moved up after this breakout. And it's the same thing if price breaks out in the opposite direction after consolidation, like we see in this Tesla's chart on the 1 hour time frame. After this move to the upside, it consolidated around resistance, moving sideways for a while and forming a horizontal pattern. And look at what happened next after these two pin bar candles. Price retraced, pushing downwards. In this case, you want to take a short position to ride the move to the downside. Now, for the final and sneakiest move, the fifth price action trading strategy is breakouts and fakeouts. Breakouts happen when price breaks through support or resistance with the momentum. But beware, because not every breakout is real. Some are traps designed to trick traders, and only the smart traders know how to avoid it. A false breakout happens when price briefly breaks a level, lures buyers in, then reverses sharply, wiping out stop losses. And because there's usually so many stop loss orders adding to the selling pressure, it pushes price further down. So here's the trick. Always wait for a retest. Retest is your best friend. It differentiates real breakouts from false breakouts. So if price breaks out and comes back to retest and it holds, that's your confirmation that it is a valid move. And if it fails, that's a fake out. And you can actually trade the reversal for profit. So you want to avoid buying at the first breakout. For example, in this Apple's chart on the 30 minutes time frame, price consolidated for a while before breaking out through resistance here, and with volume showing that the move has momentum, and with these green bullish candles. It moved up and came back to retest here, which now holds as support. This is where you want to place your entry and stop loss after confirming with this pin bar candle that suggests price will reverse. And see how price did reverse, pushing back upwards. So I just showed you 5 powerful price action trading secrets that can boost your win rate and maximize profits. But remember, no strategy works without proper risk management. Stick to a 1 to 2 or 3 risk to reward ratio. Risk only 1 to 2% per trade, and always use a stop loss. Trading isn't about being right every time. It's about being consistent, disciplined, and patient. If you found value in this video, give it a thumbs up and share the video with someone learning to trade. And if you want to know the best chart patterns that pair with these strategies, make sure to subscribe because that's coming up next. Thank you for watching, and I'll see you in my next video.